Romania and Venezuela and Greece and Mexico City and UK. Thanks everyone for joining us. So we're going to break this up into two parts. I hope that's okay with everyone. I actually have to go teach at Rutgers today, so I've got a hard stop on this, but we're going to get an hour of learning in, hopefully with some of your questions. And we're going to start with a trade that you really need to have in your playbook for this market. We call it a market play. We're going to go over a specific example of a market play. This trade, was taken from the last trading day in January. I'm going to share a specific trade opportunity where one of our guys put up, just in that one trade, over 6 figures in that one trade. Put a $10 million trade on trade. We're going to go over it. And we're also going to go over the framework for you to start putting together market trades. So the big picture for this trade, we break things into different parts. I look at trades as understanding what's the big picture for the trade, what are the intraday fundamentals for the trade, what are the technicals telling me, what's the tape telling me, what's my intuition telling me. Okay? Said another way, if you're an experienced trader, I want to put trades together. We'll talk about that a little bit later. So in this case, the big picture is the SPY was gapping higher slightly in the pre-market, and the market had formed a nice bottom and had multiple days of consolidation where price was able to hold higher. So we've got this important technical level which we'll point out, and we've got the SPY gapping up a little bit. Low in Orlando and a low in Kazakhstan. So, and this is a trade that was put together by one of our traders. So we're teaching you a trade that we made recently in less than 2 weeks. This is a trade that was placed on our desk. One of our guys put a $10 million position on. It's a very highly profitable trade. We want to build from our success. We want to study our successful trades. We want to archive them. And so that's what we're doing. Trade on our desk, trade our firm, but serious money behind, trade that we really traded well. So the trade strategy for this setup was to understand really the most important levels, 190, 150 on SPY that our traders were watching. Price goes sideways in the consolidation patterns. I'll show you that on the chart. And we're looking for a break to the upside of consolidation and a push higher. So let's just take a half a step back and talk about marketplace. So as I said, we don't think about trying to predict whether or not the market is going to go higher or lower. We think about putting together trades. This is a market continuation trade. We just make the trade and we move on. For these types of trades, for market plays, they work best if VIX is above 20. They work better if VIX is above 25. They work best if VIX is above 30. I wouldn't make this trade 2 years ago. VIX was too low. VIX was hovering around 12 and 13. I'm not going to concentrate that much on market plays. When there's an elevated VIX, VIX is a measurement of volatility. When there's increased volatility in marketplace, we're going to make market players more. The higher the volatility, the more interested we are in making marketplace. Does that make sense? Yeah, so Stephen, I'm talking about VIX, and the way that we measure VIX for our U.S. markets, we use the vehicles VXX and UVXY. All right, trading ed. So I had many conversations with a couple of experienced traders who have put up very serious numbers in the past, and we're trying to get them back on track. They traded somewhere else, they came to us, we're backing them, and we're trying to get them back to levels that they were previously. And the thing that I'm noticing, and I wrote about this in one of my recent blog posts, the thing that I'm noticing with these experienced traders is their underperformance is caused all by the same reason. And that is because they are trading off of thesis, and only thesis. They have been around markets for a long period of time. They understand markets. They have correlation trades that have worked for them in the past. They generate a lot of really good trade ideas. They generate a lot of really good trade ideas which produce P&L. But they also generate too many trading ideas that aren't very good. They generate too many trading ideas that don't have edge. They generate too many trading ideas that produce negative P&L that infects their monthly trading results, their weekly trading results, their daily trading results, so that they're not pulling enough money out of the marketplace as they should. And the thing that I've been helping them understand is they need to make a tweak with their trades. They need to understand the trades that work for them from the trades that don't work for them. And there's a commonality with the trade that work for them. And that commonality is not just trading off a thesis, but adding news catalyst behind that thesis, price confirmation behind that thesis, and them fighting for price. So in this case, our thesis for this market continuation trade, our thesis is to get long above 190, 150. Great. Our news catalyst, we had that. There was a Fed announcement at the beginning of the week. The market was digesting whether or not the Fed was hawkish enough or not. There were big bets made, but there was a catalyst to drive the market higher or lower. We weren't just trading off the 190, 150 level. We also had a news catalyst behind it. That's incredibly significant. And we had price confirmation. We got above an important technical level, and we had a technical setup, a technical wedge setup, and a break above that wedge that confirmed our thesis. And then we want to fight for price. We want to get that trade close to 190, 150 as best we can. In this case, we did even better than, okay? This is what I see. Experienced traders who are underperforming, developing traders who are underperforming, retail traders who are underperforming, trade just off a thesis. Add a news catalyst, price confirmation, fight for price. This will change your trading after you practice adding these things. Okay? After the end of the day, I want you to start to keep track of this. How many times do you just make a trade off a thesis, and how do you do when you add a news catalyst, price confirmation, and you fight for price to your trades? So how do we express a market play? We can use SPY. That's the way most people do. Some people trade futures. Fine. We can use volatility, VIX, UVXY. Those are our volatility products. Also can look at a market stock. You can trade a Facebook. Probably the best market stock to be trading right now. There are alternatives. You might decide you want to trade IWM or QQQ or bonds, TLT or gold, GLD, or another market stock like an Amazon. For very advanced traders who are listening, you want to build baskets to trade with bigger size. So some of our guys on our desk will trade 25,000 share lots. When you're trading that big, you want to think about breaking up your trade into baskets. So you might trade a little bit of SPY, you might trade a little VIX, you might trade a little bit of Facebook, because trading 50,000 of SPY might bring too much slippage to you. You might get in at really bad prices. Remember, we want to fight for price. It's not good enough for us just to have an opinion, have a thesis. We also have to get in at really good prices. Okay, so think about, for the experienced traders, think about building baskets. A very common basket you can build today is SPY, VIX, and Facebook. So intraday fundamentals. So the most important thing about the intraday fundamentals for this trade is that the Fed announced their rate policy at the beginning of the week, and the market was still reacting. So I want to trade things with a news catalyst. That was our news catalyst for this particular position. We also want to look at our long-term charts to put together a good trade. As we're looking at SPY daily, we are going to see on our multi-day charts this 190-150 becomes a really big level, but I don't want to make a trade. Don't want to make a trade unless I'm looking at my long-term charts like we're doing here. We're looking at our daily, looking at our multi-day. Okay, we're getting our longer-term charts and figuring out what our longer-term levels are. So we know 190, 150 is a big level. And then we drill down deeper into our intraday charts. And you can see this wedge pattern forming really nicely here. You can see the pole right here. This is the pole. And there's the wedge. So we get a bullish technical pattern forming. It's holding above VWAP. We see the wedge forming, we see the consolidate, and we see the break to the upside. Now we buy. We're not buying because we think in our infinite wisdom that SPY should trade higher because of Fed policy. Okay? We're not getting long because we think Yellen is going to do X, Y, Z in 2016. We don't talk to central bankers. If you do, then go ahead and try and play that game. But there's not a lot of people in the world that get the opportunity to be able to do that. So we've got to figure out another way to gain edge. You've got the news catalyst. Now you've got the price confirmation. Okay? You've got the wedge form. Beautiful consolidation here. Beautiful wedge pattern coming together. Bust to the upside. We get long. We get long. We start our position. We start our position. We're above a technical level. That's significant. And now, to manage our trade, there's really not much to do. This is a trade you want to hold. I say it's a trade to hold. Ways to exit this trade would be if it hits your price target. Ways to exit this trade would be if the ETF in this case is parabolic, or if it breaks the trend line. Never does. Never breaks the trend line. Holds beautifully. Okay? If breaking news hit. If it hit a technical resistance level, if something happened to oil, none of that happens, okay? At 355, we probably want to exit the trade. In the last 5 minutes of the day, funky stuff happens, but it's a trade to hold, and we're not selling this stock until there's a reason to sell it, okay? You should develop for yourself reasons to sell it. You want to put together your exit plans. For me, I'm going to sell it I'm mostly going to sell it when it gets parabolic. That's mostly how I'm going to sell something like this. Or if it gets some other target. And we never had that. And so the trade was holding to 355 and getting out and booking the profits. And again, this is a trade made on our desk. One of our traders in year 3 put on a $10 million position right where we're pointing this out, held it for the whole time, made over 6 figures. This is a setup. This market trade is a setup you want to have in your playbook, and that's an example of how you can put it together. Any questions? So this wedge forms right under 190, 150, and then busts out above there. And you're wrong below VWAP. So I like to add, every time we see a nice consolidation area, I like to add. So I'm going to add here. I'm looking for consolidation areas for me to actually add. Okay, so I'm going to add here. I like for a consolidation, so I'm going to add here. All right, so I'm looking for areas to add. Yep, and so Mike, we're not entering just on the chart pattern, okay? We're not entering just the chart pattern. Okay, number one, our longer term technical levels told us on our daily chart that 191 and 190-150 were very significant technical resistance levels. When we get above there, we expect to move higher. Our intraday chart is showing a bullish flag pattern in a wedge pattern. That's telling us this is a long above there. Also, we use an indicator a lot on our desk, VWAP, and SPY is holding above VWAP. Also, there's a news catalyst of the Fed very recently seeing its monetary policy. Big money traders are going to lay bets on direction of marketplace after you see that. And so, Johannes, we're going to use this wedge pattern, and we're going to buy when it breaks above that wedge pattern. We're going to buy a little bit when it's holding VWAP, and we're going to add a little bit above that wedge pattern. Nope, and this is not the trade where one of our firm traders made 15 million in one day. That was August 24th. And this was on January 29th. This is a market trade. Sure, and you can look at this, so Raj, you can look at this on a 5-minute time frame, you can look on this as a 15-minute time frame, and you can look on this as a 1-minute time frame. So VIX was very much elevated above 20 at the time. One of the indicators you do want to be looking at for whether or not trade is going to work is watching VIX, seeing if, in this case, VIX should be trading lower. And also, a good indicator to use is tick. So NYSE tick. In this case, you want to see that ticking above 800 and showing you that there's real buying coming into the marketplace. Ticks above 800 are giving you a real market edge for trading SPY. So some people trade futures. There are other vehicles you can use, and that's fine. They would certainly apply. This trade was made with SPY and with VIX. Nope, we're not hedging the position. We're using VIX as a way to place more money into the marketplace. So let's say we want to buy 5 million of SPY and 5 million of VIX, or 7 million of SPY and 3 million of VIX. It helps us to be bigger, so we're going to get long SPY and we're going to short VIX. And instead of trying to buy 10 million outright of SPY, we're going to break up that order. So a good way to do it might be to buy 3 million SPY, 3 million Facebook, 3 million short VXX, put the position on. Instead of putting $10 million into SPY, you might move the market a little bit and get some sloppy prices. Yep, so I think the stop loss is below VWAP for this trade. VWAP's a very strong indicator for intraday trading. All right, any more questions, guys? Hey, if anyone has any questions that you want to follow up with, I'm always available for trading questions there. So VWAP is VWAP is an indication of where institutional buyers are interested. When a stock, or in this case an ETF, is continually holding above VWAP, that means that big institutional money is very interested and very bullish. When stocks are trading consistently below VWAP, or ETFs are trading consistently below VWAP, the opposite is true. It is a wonderful measurement for intraday traders about whether or not a stock or a product is independently stronger or weaker than marketplace. Does that make sense, RJ? Okay, great. You guys ready to move on? All right, even when the trade is working, you would still use VWAP as an exit, not the trend that is forming. So when it's moving away from VWAP, obviously we're not going to wait until it gets all the way below VWAP. At the start of the trade, it was holding above VWAP, which was an indication that we really like the trade. As it starts to move up here, we are going to start to look at trend lines. We are going to look for hyperbolic moves. We are going to look for target prices to take profit. Yeah, so there's some people like to use 2-day VWAPs. Those are pretty good. I like to use intraday VWAPs as well. I like to not use pre-market activity for my VWAP. On your Thinkorswim, that's often one of the choices. I like to use VWAP just from intraday because I think that's what most people use. So Ryan, I don't want to tell you how to trade. I don't use EMA. I don't find value in it. That doesn't mean that you can't. But for the type of trading that I do, VWAP is an indicator that I will use. My general theory on indicators is to be consistent and to use indicators that big money traders are using. I'd rather you were more consistent than you flopped around from indicator to indicator. So one of the things we use for NYSE tick is I want to see it tick plus 800, which is about 2 standard deviations above, or minus 800, which is about 2 standard deviations below. Dr. Steenbarger at Trader Feed does a really nice job talking about how he uses it. There are different calculations. Some of the NYSE tick is not very good on some of the retail platforms, and some of them they actually are really good. So be careful about that. Yeah. So for Facebook, I'm going to use Facebook as another way to increase my position. Again, hard to borrow. That is, I threw that in there for advanced traders. Most traders who are listening to this are probably just going to buy SPY above the flag breakout. But if you're a really big trader and you're thinking about trading $10 million trades, you can't just do it in one instrument. So you're going to have to look for other products to express your trades. So I'm hoping you guys trade that big one day. But when you do, you're going to have to think about that. And as you trade bigger, I mean, there are much bigger traders in the street who be putting a $50 million trade on, and they're going to have to think about maybe expressing this trade also with bonds and also with gold. But you can see from this setup that VIX is to think about. You could have bought some IWM, you could have bought some Qs, you could have bought some Amazon. The idea is, as you bigger, you want to think about developing basket trades as well. Does that make sense? So the way that we're adjusting our stop loss in the trade depends on your trading style. I think the easiest thing to do is to draw a trend line. If it gets below the line, and to take it off. For me, I'm going to be more specific. I'm going to say, if it hits a resistance level that I'm looking for, if it gets hyperbolic to the upside, I'm going to get out of things at 355 also. I think that's a time stop for me. So what's more important is for you to put that together for yourself. So Daryl, I think this is recorded, so you'll be able to check that out later. Okay, good. All right, so let's go to trade number 2. And I want to talk about this trade. I really love this trade. I call it a changing fundamentals trade. It's one of my favorite trades. We had one of them on February 8th in BRX, something I've been trading a lot this week. I like to find stocks where yesterday the fundamentals were X, and today the fundamentals are significantly better or significantly worse than X. In this case, for this stock, the big picture was weak coming into the session. There was a large gap down in SPY. We were below key support levels. The sellers were in control. With a powerful catalyst specific in the stock, the big picture sometimes is not as important to price action. With the overall weak market, this could be a check in your favor if you're thinking about trading it on the short side. So in this case, you can see we're gapping down on the SPY to our daily support. And on the big picture, there's weakness on the open and through the early part of the session. Given the strength and type of catalyst, this might not be very relevant as a check in your favor, but it's certainly a check for the play. So the idea there is we are going to trade stocks or products that are independently weaker than market for stocks that have changing fundamentals. So if a company announces that the FBI has raided their office and arrested their CEO, and the market is very strong for the day, we're not going to look at the SPYs and try and get long that particular stock. That stock is probably going to trade down for the rest of the day to lows of day. It's going to have independent order flow to the overall market. The intraday fundamentals for this company, 4 top executives, including the CEO and CFO, resigned. There were accounting issues. They were smoothing income items both up and down before the reporting periods so that they could generate consistent quarterly incomes. So to me, this is not good. When I see something like this, I'm very interested in trading this on the short side. How can you trust the company when they've announced that they've been smoothing their results? The market typically looks 6 months ahead. The market typically shoots first and asks questions later. So for this, I'm looking at 3. I'm looking for a trend trade. There are different ways to trade this, but for my trade strategy, I'm going to wait for the stock to be, I'm looking for it to be after 10:15. I'm looking for it to be holding below VWAP. I'm looking for a consolidation a little bit near VWAP and under, and I'm looking for an opportunity to put on a short and capture a down move. In this highly volatile market, I'm going to be booking profits more than I do in other markets. I use 10:15 as a time period where I'm going to start to trend trade. The first 45 minutes of the day we call price discovery. Things don't trend in the first 45 minutes of the day 90% of the time. Most of the time they go up and they go down and they try and figure out where they should trade, and then they try and figure out if they're going to trend after 10:15. So I don't trust something that's gone down really hard in the first 15 minutes of the day. I need more time to pass before I can decide and discern that it's trending. Okay, so a changing fundamentals trade. Remember we talked about that before. We talked about how I see experienced traders, retail traders, developing traders not put together a news catalyst behind their thesis. Changing fundamentals is your news catalyst that's going to make your trade. Company fundamentals that are significantly different, better or worse. In this case, there were accounting issues, so the street can't trust the company. The street generally is going to shoot first and ask questions later. I'm looking for good risk-reward setups to initiate, in this case on the short side. I'm looking to put on a swing trade. I'm looking to hold it until there's a reason to cover, which, as we talked about in our last example, examples can be trend line breaks, targets reached, parabolic move, volume exhaustion move that we're seeing on our charts. So why trade these changing fundamentals trades? Because big money traders are trading them. Big money traders love a news catalyst. News catalysts give you edge with your trade. These stocks tend to trade for multiple days. Big money traders are leaving footprints all over the place in these positions. There's multiple trade entries with positive results and outside risk reward. I'm in a trade where big money traders are trading and leaving footprints. I find these setups in a bunch of different ways. So we have something called the SMB scanner. I turn it on. It's one of the first things I do in the morning. I look for anything up or down 3%. I look for anything with up or down 3% with increasing volume. Obviously, a situation like this is going to gap up or down 3%. We have news that is integrated into our scanner. So if something is up or down 3%, I can toggle over it and I can see what the news is in that particular stock. We also ask all of our new traders to share their best ideas on our SMB idea sheet on SMB Real Time, the tool that we've created. You click a button, you can see all of these ideas, the reasons why you should be looking at these stocks, the fact that there were accounting issues going to be on that sheet, and it was. We also have an SMB meeting. Steve runs that, Steve Spencer. He's going to go over stocks like this. And then we have SMB Real Time where you can see us trading them while the stocks are moving. So the point of this is I'm using technology, and I've pre-thought how to set up my day so I don't miss these opportunities. I can't miss any of these news catalyst trades. So you can look at BRX. So the question is, what do you mean by footprints? So footprints mean big orders are going into mid-place. So big institutional clients are putting sell orders or buy orders into the marketplace. You or I, if we want to decide to buy a couple hundred shares of something or 1,000 shares of something, we're not going to leave a footprint. If somebody really needs to unwind a position, they're going to put footprints into that stock. And the thing about money traders is that you think of it as a cruise ship. They're starting in a particular direction. They can't turn that ship around very quickly. It's going in the same direction for a long period of time. So when a big money trader leaves footprints, that can foreshadow that the stock is going to continue in that direction in the short term or in the day. So when we look at our daily charts, we know this 52-week low of 23 is a key level. And the stock is basically traded in a 4.5-point range over the past 52 weeks. So we've got 23 as a big level, and we also know it doesn't move that much. On a weekly chart, you can see this reference point. This 20 is an area that gets interesting in the stock. It's really the only reference point in this name below that 23. So again, the point of this is we're looking at our longer term charts, looking for the next support level. That might be one of the places it stops. So now we're looking for intraday. So we have a thesis, we have a news catalyst. Thesis is the stock should go down. The news catalyst is that there's accounting issues. Now we're looking for ways to put on our short trade. You can see one, we're going to short on failure to take out the pre-market high for a scalp short. We're leaning short. We're looking for price action to confirm we should get into the stock, and we're going to fight for price. And two, we get a little bit later, we're holding below VWAP, and we're thinking about an opening drive to the downside, which we're starting here. We're going to short following an initial move lower and hold at intraday lows below VWAP for momentum continuation. And as we get a little bit later in the day, again, we're going to use VWAP and consolidation to put on our shorts and hold for a significant move to low of day. And then when we break down trends, we're going to take off. So now this is where we can think about on our swing trade right here. And we talked about this very trade with our new guys. You get the stock, it's past 10:15, playing around here around VWAP. As you can see right here, it's not trading above VWAP. You're going to have to start your position right here around 12:15. When it gets below here, now the momentum is to the downside. You're going to put some more on. You're going to put some more on here, and you're going to really lay into the trade. Okay, so we're using VWAP. We're using the fact that it's holding below it. We're using time of day. We're using consolidation areas to put on our trades. Okay, any questions about that trade? Look, and these trades come up. These trades come up all the time. The last thing you always want to do with a playbook trade is do a trade review. How could you have traded it better? Yeah, so John, look, in this day and age, with an elevated fix, it's a great question. You have to be watching the overall market. And if the overall market is really get strong, that may be a reason for you to lighten up in the trade. It's not a flat, but it might be a reason for you to lighten up. The market spikes and the stock spikes up, and that might be a reason for you to put some more on because, hey, the stock just went up because there was a spike in the marketplace. So I am watching the overall market. I am watching VIX. For me, if you're above VWAP, I think you're wrong for temporarily. I think you want to take off your position, and I think if it's just a spike above VWAP and it doesn't really hold above VWAP, you're going to put your position back on. But yeah, I think VWAP is a good indication. Look, I mean, think about it. We're basically saying our thesis is big money traders are going to come in and sell this stock. Well, and our thesis is big money traders, once they get started in a certain direction, it's hard for them to turn around. Thesis is they're going to leave footprints. And our thesis is these stocks can finish low of day. So we know VWAP is an indicator where big money traders are judged. If big money traders really want out of this trade, this stock is going to hold below VWAP for most of the day. Just when we think about this logically, that's just the way it's going to trade. It's going to trade weaker than VWAP for the day because big money traders have to get out. They're not going to risk that stock potentially getting above VWAP. They've got to put their sell program on. Does that make sense, John? Yeah, so I'm looking for these areas of VWAP. So you can see right here at 12 to 12:15, you see this level right here? When we get below there, it's the downside. You can also see this period right here of about 30 minutes that goes sideways. When we get below there, I'm going to add. So I'm looking for consolidation. I'm looking for shifts of momentum to the downside. I'm looking for more reasons to get shorter. That's my thought process. All right, I have trouble with execution since I get spiked out very often. Do you have a tip on how to improve my execution on micro time frames for stocks trading under that? Yeah, so look, SSR stocks are hard. Stocks that are down over 10%, they will spike. With them, I like to take profits into moves to the downside, into sharp down moves. I want to take profits in SSR stocks and then wait for spikes to the upside. The best scenarios for me are to watch SSR stocks spike up above VWAP and then start to go sideways a little bit and then reclaim that area below VWAP and start to put the trade back on again against the spikes above VWAP. Those are trades I really, really like. The point is you're gonna develop strategies that really make sense to you. Sure. So, John, I mean, that's a really good point, John. So, a lot of people are not going to do the work that you're doing, the thinking that you're doing. BA had a news catalyst, right? I mean, that trade didn't really work for you just because you had a thesis, right? It also had a news catalyst behind this. And I'm telling you, I talk with a lot of our experienced traders about this all the time. In the Disneys, in the spike today from 181 all the way up higher, there was a news catalyst behind that. There was a news catalyst in oil. The support that people are using, that 181 line in the sand, that 1812 line for futures, that didn't just work because you found a technical level. It worked because also there was a news catalyst that came out in conjunction with that important technical level. There was a big news announcement about the price of oil that came out. It wasn't just a level held. And so instead of just making trades off of technical levels, layer on a news catalyst, layer on price confirmation, layer on getting it at really good prices. Okay, look, we're going to do part 2 next week. I got to head out to Rutgers and talk to and do a class. If you guys have any questions, you certainly know where to find me. If anyone has any questions about what we do here, you can go to smbu.com and ask there. There's a live chat you can get into. Just go to smbu.com and watch our live chat pop up. And always happy to answer your questions in email. Thanks, guys, for coming. And look for the playback for those of you who want it. Talk to you soon.